Good morning, everybody. I'd like to call to order the Board of Directors regular meeting of the Dutchess County IDA. Jasmine, could you take the roll call, please?
Tim Dean,
Present.
Mark Doyle,
Yep.
Kathy Bauer, Amy Bondieri.
Here.
Jamie Picone,
Here.
Don Sagliano.
Here.
Okay, we have a quorum. Just to remind everybody about our conflict interest disclosures. If anybody has a conflict with any matter coming before us, please state so now and state what it would be. Okay, I don't hear any. If a conflict comes up during the meeting, please let us know and we'll recuse you. Sarah, proof of meeting notice posted?
Yes.
Okay, any bills and communications?
No.
Okay, we do have minutes of the September 13th meeting. I hope everybody had a chance to review them. I was not there and Amy was not there, but we still can vote on the approval of the minutes. Does anybody have any changes or corrections? Would somebody be willing to make a motion to approve them?
I'll make a motion. Second.
Okay, thank you, Mark. Thank you, Jamie, for the second. All in favor, Jasmine, could you please take a vote on that?
Don Sagliano,
In favor.
Jamie Picone,
Approve.
Amy Bondieri,
Recuse? Wasn't here. So.
Mark Doyle.
Approve.
Don, do we have to recuse ourselves if we weren't present? I don't believe we do we? I will vote. I was not there, but I'll vote in favor. Report of the treasurer, financial report.
Yes.
Good morning.
Looking at the balance sheet, we have it displayed there. The cash is 3.4 million. In the Salisbury, which is now NBT, there's a -10, but that's going to be reversed. It was hit at the end of the month, and the bank said that they would reverse it. It happened in August also, but there's a receivable of close to 12,000. That's really, we bill out for low-key, the workforce. So those invoices were sent out at the end of the month. Looking at, and I'm sorry, of that 3.4 million in cash, 781,000 is pilot payments, so they will be going out. There's an accounts payable down below and under the liabilities for the school pilots that have been received, but the check hasn't been sent out yet. And they would be going out this week, coming. Looking at the P&L, this one is,
Wait till,
I'm sorry.
Yeah.
Looking at P&L, this is that has the budget for the 12 months. This is the standard P&L that's usually shown. So looking at the P&L, there's the revenue without the pilots is 760,000 to a budget of 447,000 for favorable to budget by 313,000. The expenses without the pilot is 617,000 to a budget of 690,000 for favorable by 73,000. The total, the net income is 143,000 to a budgeted loss of 243,000, favorable to budget by 386,000. So the next page is the.
Excuse me, Chairman. You have on the line, 6240, audit expense of $15,000. But nothing's been expended yet?
No, we'll we'll get the bill from the auditors for the, we usually get it in January, we accrue
So
it.
this is for the current year, not the prior year?
Correct.
Okay. All right.
Any other questions?
The CD, why is it, was there money in there? Why are they
Where are
hitting?
you, which one are you talking
The
about?
CD one in Salisbury, the minus $10.
Okay, that, we used to have approximately 250,000 in there. And then the other account was the sweep, the investment account. So when NBT merged with Salisbury, which I will change Salisbury to
That's fine, yeah.
NBT, they closed, they're using that $10 account as a sweep. It sweeps in and out. So really that balance should always be zero, and the CD2 will be the funds.
So the 250 went to CD two?
Yes. So it is, if you do look in the bank statement prior to the merge, we had two separate balances.
So do we expect at some point they'll fix that so it's always zero, or is it just?
I know, I said, do I have to do journal entries every month for this? But no, it was a quirk, and they said that it happened in August and again in September, but they have rectified that.
So it's a service charge, right?
Correct.
Yeah, they're not that quick to.
Yeah. And
Fortunately,
hopefully the online banking will rectify the fact that I don't get these statements.
Yeah, so we haven't been, that's one of the reasons why you're seeing the report this morning is we haven't been getting the statements in a timely manner in time to give it to the board beforehand, as we've done in the past. So we just got these statements yesterday.
But don't you have the ability to get them right online?
Well, it is, I went online and the only statement was for the IDA was August, zero amount. So they had the wrong account out there online. They're working on it. They have the.
$10 and not 10.
They have the,
So is that just our relationship that they're working on, or is that a whole system wide? I mean, I know they just had the merger, right?
Well, August 11th.
Yeah, but still,
Right.
quirks, yeah. it's-
yeah, and they did say that,
My experience is the quirks have been all
Okay.
wrapped out. We have a substantial amount of
Yeah,
activity
yeah.
with that bank.
All right.
All right, well, sounds like it's being worked on, and it's not a sign that we are aware of that it's anything worse than that.
and hopefully that when the online banking comes, we'll get it, the first of the month.
Yeah, we used to get it.
Okay,
Are you not using the supplies line or you just didn't have any expenses?
No, there hasn't been really any expenses specific to the IDA for supplies. Because other supplies are captured really in our,
Yeah, so we usually, the supplies specific related to IDA would be like letterhead.
Yeah.
Envelopes, and so we haven't had that this year, so. Or so far this year.
Huh.
okay, so, then looking at the next page is the, P&L. Now this is where I put the budget and I put it at 9 months.
You shrunk it.
honey, I shrunk the budget.
Sorry,
So you're on page, what page?
Page 1 of 1.
Well, their other one has page 1 of 1 also.
sorry.
Okay. All right,
One is computer, from the software, the other is
Got it.
Excel spreadsheet. So
Got it.
I apologize. I will try and get that
not a problem.
rectified, but. So as you can see, not much.
Yeah, because the actual still January through September, and then the others are prorated for 9 months, like the audit expense.
Why is there a difference in the revenue? You're adding the pilot thing on this report, on this rendition where they're there on the bottom, okay.
No, yeah, there's still this one.
Yeah, it's the font's so small.
I'll work on that.
All right. Anything else?
So why are we so productive on the admin fee line for the revenue stream, $370,000 over budget? Because that's really driving the swing in budgeted net loss of 182,000 versus a net income of 143,000. So that difference of 370,000 makes up most of the favorable variance of 325,000 net income for September versus December 9-month budgeted. What's driving the administrative fees?
So we had Belfield Phase 2 of 302,000.
Okay,
Tompkins Terrace was almost 10,000. And the Arthur May in there is 121.
and that's all this year?
That's all this year, yes. And then earlier in the year, we had the 218,000 of Can-Am.
So it's just a matter of projects. It's very hard for us to, accurately
Did you
budget.
send me a copy of that when you?
But also, we're gonna see on the budget that, some of these are paying their fees, their admin fees over 3 years. Right, Sarah?
Yes, so, and we'll talk about it at the budget, but because the IDA had changed the fee schedule and now is charging more for projects. So some of the larger projects had requested a payment over time, so we're allowing them to pay over a 3-year period. So this Arthur May that Jane spoke about is the second installment of their third payment.
And then you'll get into the,
And what's the composition of the administrative fee? Is it the mortgage recording tax?
it's like
or is
1% of the total.
So, yeah, so for projects with pilots, it's 1% of the first 25 million and 1/4% of the balance of the
Okay.
cost of the project.
Okay,
So Bellfield's gonna be a big,
Yeah,
payment over 3 years.
yeah.
Are we, when we allow them to have a longer payment term, are we charging them more than what we normally would collect?
No, it's their regular fee, but it's just divided over 3 years.
And how did we confer the ability to have progress payments made? I don't know, was that something that we as a group opined on, or is it just something that we decided to do?
So, talking with our council, I have the administrative authority to do the payments over a certain time period, and so it was just 3 years that we did, and we put that in the contract, the project contract, so that they pay their payment in 3 years by a certain date.
I would just-
Otherwise-
It's not a bad revenue stream on the budget, because you'll see
But I
like,
would just suggest that in the future, just let us know.
Yeah.
Yeah.
I mean, there is some risk to deferring the revenue. If for some reason somebody collapsed in their project, we would.
Is that on a project by project basis?
On a project by project basis.
How is that determined? Is that determined with the closing documents? Is that's where it's established?
Yeah, at the closing documents, and then, yeah, but we also write in our contract, and even if they default, they still owe us that payment. So, it's just,
Well, if if somebody doesn't have money, they don't have money.
yeah, yeah.
But at any rate,
Yeah.
I think I'm not questioning that you have the authority to do it, but I think it would be good for us to know. Because it is, well, it's nice to spread out our cash flow. There's some risk to
Yeah.
not getting something in the beginning versus over 3 years.
Yes, yes.
So when you book them, then they're booked on a basis of when they're going to be paid, not all at once.
Yes,
Okay.
exactly.
So we're treating that revenue stream on the cash basis?
Yes,
Then this is not an accrual basis financial statement. It should be accrued, it's due, it's payable, it's certainly.
Well,
at
it's
the station.
conditional, it's, the revenue is conditional on whether they complete the phases. So when
They
the
got
phase,
they got the benefit for the admin fee.
I understand that.
Okay, so on an accrual basis, it should be documented as a receivable.
unearned revenue. Right.
True, I mean, on an accrual basis, but is if you.
So then
look
it's
at
not
it at
accrual
the-
basis.
Is if you, no, it's not.
Okay.
100% accrual basis, but if you look at it, I think they, I mean, this was just the way it had been set up. I believe it's like, based on completion, part of.
Oh, I don't know, does the
completion.
contract have
so,
milestones?
so the only Arthur May is based on completion. The
Okay.
others are, based on just, by calendar date.
Oh, okay, because so, I mean, I would say that based, for Arthur May, is it, the revenue that we receive depends on their completion. So it's pending something, so it's more of a conditional, so you wouldn't accrue it.
Belfield, you would.
But Belfield, you would. Yes, I agree with that.
And we should check with our auditors as well. I mean, just to sign off on it.
Okay.
Can you just footnote it? You can just footnote it.
It's
That's an
not
easy
cool
entry
basis.
too.
It's not a cool,
Yeah.
basis. Set it up as a receiver.
Yeah, that's all.
Then we could look at it and say, oh, that's right, we're gonna get that,
Over
you know,
time,
in the
right,
future
next
over
2 years.
time.
Right,
So I think it would be helpful to
I agree.
the reader.
Yep.
Did our auditors come across that in their audit work? Or is it only started?
Well, this is I think the first year that we have
Okay.
a payment.
Yeah, so
Yeah.
it would be timely to check with them before they do
Yeah.
statements for this year. I would use that as sparingly as possible.
Excuse me?
I said I would recommend we use that as sparingly as possible,
Use what? What do you mean?
the payment.
Distribution over years.
Extending payment terms to somebody, especially without any change in what they owe us. Right?
Any time value of money.
That's what I mean.
Yeah, there needs to be a incentive to pay us up front.
All right, anything else? Thank you, good discussion, everybody, I appreciate that. Anything else, Jane?
Any questions?
No. And we don't need to vote on that, it's just for information purposes. Okay. Report of committees. Sarah, do you want to handle that?
Yes, so the audit and finance committee met last week to discuss the results of the RFP we sent out for our auditing services as well as the 2024 budget. And so we have Jamie here who's going to walk the board through that.
This is walking us through.
The both selection of the
Okay.
auditing firm and
So
then.
can we do
and then-
them separately?
Yeah. So let's start with the auditing firm. We sent out the RFPs, correct, Sarah?
Yes.
We received 3 bids from RBT, who we currently use, PKF O'Connor and Prager Metis. In deciphering the 3 proposals, it seemed that RBT and PKF were more not-for-profits and IDA experience. Prager Metis was more of government entities. Their number was a lot higher. We immediately knocked Prager Metis off the list. We then discussed RBT and PKF. They're very similar in price. It's not really material, but we decided we're recommending that we stick with RBT because of the learning curve and their experience with the IDAs and us. So that was our recommendation, was to recommend RBT as our auditing firm for the next 3 years.
I'll make that motion.
I have a question.
Well, there's a motion on the floor. Is there a second?
Oh, I'm sorry, yes, we need a second before we go to
You caught that
discussion.
down.
Anybody will?
I will second it,
Okay, all right, discussion.
but the discussion.
Go ahead, Mark.
Thank you for your rules. That's,
Yeah, we really
Yeah.
don't always do that correctly.
no, it's exactly right.
So, yes.
So in this case, where we've had them audit us before and we're going for 3 years, are they proposing to rotate their principals so that
Yes.
it's not just the same person doing that?
Correct.
Right, and they have been doing that up
Correct.
to now?
Yes.
And this is, how many times have we engaged them in 3-year contracts consecutively?
Well, so prior to RBT, we used them when they were their other.
Vancore.
An event, but again,
So we use Vanacore, not Cedar.
or Nacito.
Oh, we use Cedar. Okay.
Cedar was acquired by Vancore.
Yeah,
Vancore.
so we've used them since 2016.
Okay.
But so, Mark, just typically with the way an audit engagement is such is that there's a field partner and then there's a concurring partner that reviews all the work papers and the work of the auditors, you know, before each year. And then also it's required for a firm to be peer reviewed where you open up your books and other auditors come in and review your work papers for a multitude of clients in order for a CPA firm to qualify to be peer reviewed. One of the contexts is that they have to rotate their staff through, you don't want to have the same staff working on
Through the different
on an
plans.
engagement for 20 years.
Yeah.
Is Vanacore peer reviewed?
Yeah.
Okay, good,
All three of these are peer reviewed.
great.
Okay.
Okay, we have a motion and a second. Jasmine, will you please, unless there's other discussion, I'm sorry. Any other discussion? Okay, Jasmine, will you please take a roll call vote on the approval of the auditing firm as RBT?
Mark Doyle,
Approve.
Amy Bondieri,
Approve.
Jamie Pacone,
Approved.
Don Sagliano,
Approved. Approved. Okay, for consideration and approval of 2024 budget and submission to Paris, I just want to make a comment before Jamie gets started. There will be a discussion in I think Jamie's presentation about a compliance position. And Sarah approached me before the meeting about that and asked me how she should present it. And so I asked her to tentatively plan on it in the budget, not because I was trying to do that in advance, but I wanted everybody to be able to see the impact if we were to do it on our budget. So I'll let Jamie handle it. I just want everybody to know that Sarah did not do that unilaterally. So, okay, go ahead, Jamie.
Okay, well, in front of you, well, I'm looking at last month's meeting notes or last week's audit notes. So, yes, it looks the same. So basically, I don't know if Sarah wants to walk us through the 2023 estimated year end. There is an excellent narrative on the page behind it that goes through all the line items. But as we said on the revenue that we went over on the financials, that we're at 782,000 for administrative fees. That's 4 projects that have gone through the IDA this year. 32 Eastdale, Belfield, Arthur, May, and Tompkins Terrace. The application fees are 1,000 each, obviously, so that's 4 projects. The compliance fees are, Sarah?
Yep, so they're, the compliance fees that we charge for projects, certain projects are charged $500 and then certain projects are charged 1,000. It's just when we had changed the fee schedule, we had increased the compliance fee. So that's why they're different.
The other fees are, Sarah?
They are, the fees that we charge projects for, third-party studies such as the reasonability study and the monitoring of our local labor policy.
The interest was a very conservative number for 2023. It's exceeding, the interest rates are high. Still going on the conservative approach for 2024 with the large vast sums of money we have in the bank, $50,000. Audit 13.9 as discussed. Dues and publications 3,000, insurance 43. The professional service contract, Sarah, 655,000.
Yeah.
Let's discuss that for a second. That is,
So if you go down to the second half, you'll see, of the budget, you'll see the 60,
oh, that's right. There's a footnote at the bottom for number 10.
I just have a question about the revenues. We have compliance fees under number 3, and then we have other fees, but the other fees are described as local workforce compliance monitoring and reasonability studies.
Yeah.
Why do we have some compliance things in compliance and some in other fees?
So because the local workforce compliance fee is passed through, because we pass those charges on to the project.
Okay.
Versus the compliance fees we keep. The annual compliance fees we keep.
I got it. Okay.
Run that by me again?
Okay, so we charge projects an annual compliance fee. That's for internally to cover
Okay,
our
internal.
costs.
And we
And we
keep
keep
that.
those fees. Whereas the local labor policy and the reasonability studies, those fees are passed on to the project.
Right.
So you will see in professional services, number 11, you see there is a charge of that 43,000.
So just in anticipation of discussion,
Yes.
are we, if we're talking about a compliance person, will it be for items of revenue in number 3 and not 4, or both?
I'm sorry, repeat that?
You're going to be talking about potentially the need for an additional compliance person.
Yes.
are those the revenues to offset that expense only from number 3 or 3 and 4?
So, neither. So,
Am I jumping the gun? Should I be patient here, Jamie?
No, I mean, we get to it, it's the 50,000 in line number 10, where it goes from the LDC, it's currently at 150, it's gonna jump to 200,000.
so it's 150.
So we'll find out more about the compliance officer when we talk about the LDC.
Yes.
Okay, that's fine. That's fine.
So that's why that, line number 10 jumps from 600,000 to 655. Professional services, Sarah? Or the,
So that's our council fees, again, the local.
oh, it's broken down again down below. I keep forgetting the footnote. 10,000 for Kaplan and Rothschild. The workforce compliance is 46,000. And, et cetera, the 62.
And then the other contracts
Right.
we pay out. Okay,
Rent, supplies, travel, all the same. Brings us to total expenses of 748,000 versus the revenue up above because we're getting the second and third year revenue from the projects.
Yep.
Gives us a surplus of a projected 175,000 roughly for next year.
Can I just ask a question in regard to what Don brought up in regard to the Belfield? Is if we have to accrue that into this year,
it would.
then the 2024 budget will need to be adjusted for Belfield or any,
Well, it'd be adjusted for all four of them, correct? Belfield, one more payment.
Any of the.
Well,
Any of-
Arthur May, we might not. but-
Arthur May, I
Determined
will
upon-
check because that does say in the thing that it's based on their completion of.
So we would have a revenue of the whole entire amount, but then a deduction under receivables?
We'd set it up as a receivable,
Yeah.
I think,
unearned,
I
whatever.
think we could adopt the current format of the budget as is.
Yeah,
And then after if the auditor says, no.
Okay.
We want you to do it this way, then we could make a amendment to the budget in the future
Okay,
in order to, you know.
It's only gonna be more favorable
it'll,
if we have to, and on the revenue
You're
side.
talking about putting the revenue in 23 versus reporting the revenue in 24. So this budget, you know, you may reduce the admin fees, you know, to 400,000. And, you know, just will flush out. I just have a question on the professional service contracts for the 425. Seeing how it looks like that we're gonna have a pretty significant increase of revenue over expenses to our fund balance this year, notwithstanding that we're only treating some of these large admin fees on a cash basis as opposed to accrual basis. I think as an entity, we ought to be thinking about providing more funding to both the Hudson Valley Arts and Hudson Valley Film, as well as the Hudson Valley agribusiness thing. I mean, those entities work on, you know, duct tape, paper clips, and a shoestring that's knotted.
and we did
In order to do
increase
things.
the ag one.
Yeah, we did.
Well, I mean, by $5,000. I mean,
In that case, that was significant, but in this,
Yeah.
these haven't been raised and.
I mean, I would like to, you know, again, we could do it, but I would like to see if there's some way that we could spread an additional $50,000, which is conservative based upon, you know, our expected $150,000 surplus. You know, find out or work with these, you know.
If they were to
sister
receive
and,
further investment, what they would do. with it.
Right.
You know, I mean, I don't know how the agribusiness guy does it, but, you know, he does it. I mean, but, you know,
Yes.
that's farming stock. They can, you know, they can repair anything in the field. And, you know, they're working with it, but even some of the other.
Well, the film is so important, even with the
Yeah,
hotel tax, the
you
hotel
know,
room tax.
You know, so I would like to explore, you know, possibility of increasing those line items.
If there's some way that we could get them to leverage our increased investment with some kind of matching or, you know, that would be great, but
Okay, yeah,
But that's a conversation we should have.
Yes.
Yeah.
That, you know, is it gonna go dollar for dollar? Are they gonna bring more dollars or $5 to our $1 increase or
yeah.
something?
Well, I mean, there's no doubt that the arts really are an economic
Driver.
There's just no doubt about it. So,
And we have not, just like with ag, we have not increased their fee in probably 10 or 15 years.
Yeah.
yeah,
It's my guess.
yeah.
So that's
From an
all in line.
inflationary standpoint, they have, you know,
Yeah.
so I agree with Don. I think that we are in a position to maybe be a little more proactive.
Thank you.
Well, I mean, even, you know, and I'm throwing a conservative number out there, but, you know, we're building fund balance.
Correct.
You know, it's in essence taxpayer money.
And it's our job to use it.
Let's
Yeah.
utilize it without, of course, we don't want to deplete, you know, the. fund-
Right, with two
fund balance.
possible not lean years coming up with the economy.
You know, so.
I mean, our role is to encourage economic development.
So how do we, what's the next step? How do we work on this budget as well as try and,
I think we could still approve the budget as is because we have to submit this to the state by the end of,
right,
in the next couple weeks.
Okay.
So, but we can have a working budget and I'll have a conversation with tourism and the arts on if we were to increase it, what that would look like, if possible
would be
matching
from our
funds.
surplus.
It would be from our surplus.
Right.
And then I've up here, up to $50,000, right, to spend.
I mean, I'm just throwing that out there. We could be, you know, if some of these groups have a bona fide need and everything, I mean, I think that's what
Yeah.
we ought to be trying to endeavor. I mean,
Yeah, and then if the board would like, I can also have them come in and make a presentation of what that.
8 minutes
And how
or
they could
less.
use that.
yeah, or give us a document or projections.
Projections on that, so.
Okay.
All right, good.
Maybe one of the ways of saying, look, because this has been a base forever.
Yeah.
Is that this is a surplus distribution or whatever, it may not be continuous,
Yeah,
but
And with Newburgh Soundstage, it seems like a lot of productions are heading to Orange County. I know they stay in Dutchess, but
yeah,
they need to
so,
compete.
yeah, exact, so, so the soundstage in Newburgh, we've been benefiting, there's been more productions there, but we've been benefiting because there aren't any hotels being built in Orange County right now, so they've been staying here. We haven't seen that for a little bit, only because there was the writer's strike, so all productions were shut down, but now that the strike, I think it's just an actor's strike.
yeah, but they can't use the sound stage. I'm obviously not a film, you know, entertainment, but they can't use the sound thing for on location shots. You know.
That's true,
Yeah, the on location, I mean, they just announced a big movie in Orange County
Yes.
this past week.
yeah.
Yeah.
So,
Okay,
All right,
what else?
that really wraps it up.
All right.
But just to make one more comment, our 2023 estimated end of year versus budget is a $500,000 swing, you know? And that basically comes down to the revenues.
Right, and I just, remind everybody, not that we all, I think, know this, but, we budget based, try and be conservative. And history tells us that there are lean years and there are not lean years. So, I think we do a good job of not taking too much in the great years, but also that allows us to continue these revenue streams in times when, projects aren't going on for a year.
Well, just look at 2022, we had a deficit of 381, so.
And so if we were to come into that period, we are conservative, so we're able to continue what we commit to through those lean years, which I think is important. Okay, so is there any other questions right now, Sarah? As far as, there's not really our own payroll in this organization.
yeah.
And I know that we vote on this, separately, but do we want to discuss slightly in some way the LDC inputs to this?
So, yeah, so the LDC, again, we are proposing, or I am proposing an increase in the contract between the IDA and LDC by $50,000 to account for increased compliance and the potential staffing of a compliance person. The cost of the salary the reason behind that is the cost of the salary of the person will be shared between the IDA and LDC. So,
So the total cost, if you're, per your budget, what is the total cost for this position that you're talking about?
so we still have to flesh that out, but our, in the IDA, in the LDC budget, you'll see is I budgeted about $55,000 for base salary. And then on top of that would be the fringe and then the benefit. So the total cost, we have, our fringe package is 24,000. So that would be 80,000 would be the cost.
When you and I talked about this, you said it's possible that it may be a part-time position as well.
Yeah.
So I think it's important we talk about it here. It'll make the discussion in the LDC maybe a little bit quicker, but I do think it's important since they are sort of intermingled. Talk about the whys of this.
So the reason behind hiring a compliance person, whether it's full-time or part-time, is the number of projects that we have in our portfolio has basically doubled. So if for the IDA, the last time we used to have a part-time compliance person, and that person left in 2018, and we never replaced that position. Instead, the CFO and the CEO absorbed the duties of the compliance person. But since 2018, at that time, we had about 27 projects in our queue. Now we have 56 projects in our queue. And that is because, while we didn't necessarily, we approved those projects, but some of those are phases under projects. So such as Eastdale currently has 17 phases. And then.
The 17 phase will be the separate parcels of
The
each.
separate parcels, and so we have to treat them each as a separate project, because
Right.
they each have compliance requirements. So just the monitoring of those projects, and making sure that their insurance is up to date. The reporting that we have to do is made on a timely basis, sales tax, which can be quite laborious to follow, as well as the other regulations that have come up since 2018, such as reporting to the municipalities, posting on our website, such as that. So at that load on the IDA side has just become a little bit
Onerous.
That's the word, yeah, onerous and hindering a little bit about our base, responsibilities.
So how many, we had 27, we now have 56. Does that mean 56 that you have right now that require compliance monitoring? Because I
Yes.
know Eastdale, they close things out as.
No, but they have other pilots, so we still have to report that
Yeah,
for 25
okay,
years. So we still
yes,
have
okay.
those.
Oh, so that's where the big number comes from, the
Yeah.
50s, because I was going to question
Yeah.
that. So that's the pilots throughout the years.
Throughout the year, so, yeah,
IBM might still be on there.
The sales tax has a finite
yeah.
Right.
period,
Yes, well, also the labor and workforce issues, those are, I would think, although we sub that, some of that.
We do,
out,
but we
so-
still have to review the reports. We
How
still have
much,
to review.
How much are we actually collecting if we were to break down
that's the
compliance?
That's what I was,
You had a line item, you said you had a line item in the budget.
Yeah.
How much of those compliance fees that we're charging,
50.
22,000.
20, so.
Year end expected for 2023.
So, yeah, so 22,000, we collected this year.
and how are those compliance fees calculated? I mean, if, somebody like the Eastdale that has 17 separate and, distinct projects, is it by project? So how are the compliance fees calculated?
So the compliance fees are, so we charge them annually $1,000
Each project?
each project.
Some are 500.
So, but some are,
It depends on when the change occurred.
yeah.
What
raise
changes?
In the
that.
contract.
So we used to charge 500, used to be our compliance fee.
Okay.
And then the board revisited our fee schedule and we increased the compliance fee to 1,000.
And anybody that was paying $500 was grandfathered?
Correct.
so, is there, since that's clearly not enough to cover what we're budgeting, is there an expectation, has there been an expectation by us historically that the administrative fees that we charge would absorb some of that cost, or, you know, just,
Yeah, how would you break it out so that
Yeah.
it becomes a more,
Well, the administrative fees are one-time shot.
yeah.
yeah,
I guess we have some of them paying on term.
But we have accumulated a lot of money from
Sure.
that. So I'm just curious as if that's the expectation. If not, then should we be charging more for compliance to cover the cost?
I think it would be helpful too, that if our maximum fee for compliance, work related, et cetera, is $1,000 per project. Is there some way to determine how many hours that encompasses during a year? I mean, the sales tax, again, has a finite period and then it's done and the applicant doesn't have to do any more sales tax reporting because the applicant also reports directly to Albany. You know, the IDA has to accumulate all that information in their own filing, so that's got a finite period. As well as the labor is complete when the project's complete. So what is the additional ongoing compliance for a project that may be fully built out and is only running out their 15 or 20-year pilot? What's the compliance related to that?
So
Or the
it's,
Cricket Valley.
it's billing for their pilot, calculating their pilot.
Okay, that's not a compliance, that's an administrative fee.
Yes, but
We
we have
have
to
to
then,
do
we
that
have,
in-
we have to report that into Paris.
Okay,
right?
okay,
It's
again, that's part of the administrative fee.
Yep.
You know, that's not a compliant related
Right.
action based upon some regulatory or compliance file with
Requirement
a
agreement.
local business. That's an admin fee.
Yeah.
Right, like compliance would be Maribou tracking their sales tax to make sure they're not over like,
So
Yeah.
Phase
I guess the question is,
Hellfield.
of these 56 projects, how much of this compliance work is front-loaded in the first 3 to 5 years
Yeah.
versus the next?
Are we just running, how many of these are we running out where you got, you know, the two tax bills, one in September, one in January, right? Okay, and coordinating that.
Yeah.
As far as I'm concerned, that's not compliance work, that's administrative work. Okay, and it should be absorbed by the cost of our administrative fees. So on these projects that are running out, what else is there from compliant, other than the perfunctory item of entering the stuff into Paris? Again, on an ongoing basis, that's annual. And that's not really, that's a compliance related thing, but again, it's more of an administrative factor.
Be
So-
additional administrative.
So is it really, you know, an administrative assistant aide that's doing this, the printing out of the bills or whatever it is?
That's- yeah.
As opposed to the compliance of, I gotta file the ST 214, the ST 220A.
Right.
Or I gotta download the Paris report. That's more of a compliance, or I gotta make a report
And it
to
requires more expertise.
New York State, economic development, et cetera. That's, got a regulatory body behind it rather than, we gotta charge the pilot. That's admin.
Yeah, I mean, the pilot, we also have employment and insurance that we have to monitor.
The certificates of insurance, right?
Certificate of insurance, as well as annual employment report,
FTEs.
FTEs that they report.
Yeah, so that the applicant, my understanding is, I have a little bit of experience,
Yes,
is that
yes.
the applicant provides that, and then it's, again, an accumulation of the data to roll it in. Whether you roll it in one report or you gotta enter it onto the Paris database, again, that's a.
Yeah, and I mean, and there's a lot of time involved in that because we don't get it
Right.
when the due time, we have to chase them. We have to review the reports, make sure that they've filled it out accurately.
Right, so the question, I guess, really comes down to, have we run into a bubble because we have so many things? Or based on our project volume, is this gonna be an ongoing need?
Yeah, I mean, I think it's going to be an ongoing need because we have to monitor them for the length of the contract. So on top of that, as well is posting on our website, making sure our website is compliant with regulatory requirements of the information on there and updating that. We also have new reporting requirements that we have to monitor. And then potential change to the Paris system that's going to be, being discussed right now in Albany. So I think those are all tasks that, we will need assistance moving forward, managing these projects.
Issues too.
So,
Does that part of that include workforce issues, that compliance you're talking about?
So-
Having to do things, having to check, the workforce compliance?
yeah, so it's the workforce compliance.
Well, that's currently.
But that's in the first.
That's not
a
an
finite,
ongoing thing. That's, the project gets completed,
During
the
the
building's
building phase.
complete, the labor, the workforce.
But it could be ongoing in terms of, right now, we have, several of those projects in construction, and as new projects come on,
right.
they will also have that
Understood.
finite,
That's-
that.
How many current team members do you have, staff members?
So I have six total, 5 under me.
500, so, Jasmine, Jane,
Amanda,
okay,
Renee, and Philip.
okay.
So Philip and Renee, they do, I would say, business development. So Philip is the director of business attraction. Renee is the director of business retention and expansion.
Okay, so under Renee's auspices, retention,
And
right?
expansion.
Would that include the current retention of our existing? Are they working, do they work in the office or they work remote?
So they work in the office, but they do have, all the staff has the ability to work remotely. And Renee works, I would say, 40% remotely and 60% in the office.
Okay.
Philip is the same. But Philip, I would say, is an exception because he actually
Has to visit.
has to visit sites, site selectors, and goes to a lot of trade shows. So, so that's the 40%.
So then the people monitoring the compliance is basically Hugh.
Me and
And you
Jane,
have some of it subcontracted out.
only the local labor.
Right,
Yes.
right.
So, but in terms of IDA employees, it's just Jane.
Well, they're LDC employees.
Well, they're LDC
Right.
employees, but in terms of doing IDA work, Jane and I are the only ones who do IDA
So,
work.
so the question is, it seems like our admin fees are adequate. Are the compliance fees adequate? Is the question I have.
And there seem to be that they're essentially one-time fees. Is there some sort of
Is it annual?
annual?
So, no, so the compliance is annual.
Yeah. it's-
Oh, okay.
Compliance is
Well,
annual.
Where some of them are
$1,000.
$500 and some of them are $1,000.
That's annual.
When did that
Okay,
change?
okay.
So 2 years ago,
Yeah,
we did the fee
about 2
schedule 2
years,
years
yeah.
ago.
Is that a special meeting fee too?
Yes.
That will be
Okay.
increasingly in the future closer to the actual
I
expense.
mean, I'd like to see a breakdown of the revenue for the compliance fees. With 57 projects, how is that all calculated?
Again, keep in mind, like Don said, that some of it really is administrative.
No, I understand, but just the line item itself
So.
would be helpful to see.
All right, so, Sarah, for this discussion purposes today, what did you want to accomplish?
So it's, again, the increase of the annual fee to the IDA, to the LDC
Right.
of $50,000.
Right, so you had said, and again, just a question, it could be part-time, it could be full-time. Well, what is it that's really needed? Because, first of all, can you find a part-time person? And second of all, do we need a part-time or full-time? Because, the difference is significant in money, but it's also, it's important to know which is needed.
Yeah, I mean, Jane and I have been going back and forth. That's the reason is we
It's
haven't.
a lot of timing too, in regard to, from, maybe October through mid-April. It's very busy. Everything has to be done. So that's a really rough time of the year. And then as you go on, you have a couple of down months, but then all of a sudden it spikes up.
Is this something that can be contracted?
Timely.
I'm asking you to.
Yeah, I don't know if it can be contracted.
It seems like the contracted people that work for the municipalities are so out of touch and
Yeah.
not personal.
Yeah, I mean, I think
Yeah,
one of
I
the
think
roles
that's
that we see this compliance person is to be, to help us implement and maintain best practices. So even during that downtime is not necessarily, there won't be any work for this person to do. They'll be, put implementing, potential of recommending policies for the board to review about, reviewing our policies. So there's work, a year-round work for this.
Seems like there is. If there's only the two of you working, plus we have Mirabel coming on.
Right.
Bellfield's enormous.
Yeah.
So,
There's a couple other, what were the other names that you mentioned? What are they?
Well, we have Belfield and we have Hudson Heritage.
No, I'm talking about from your resources, your staff resources. So you have Renee and this guy Philip, I guess, that are on.
Then we have Amanda, who's our marketing
Okay.
person, and she also, videotapes our meetings.
Okay, all right.
So it seems like they have job titles.
so Jamie, I guess, one of the things I would say is I want to defer a little bit to the budget. And the
Yeah, no, absolutely.
What was your thoughts at your meeting?
No, the thoughts were, it's fine. We're gonna place mark the 50,000 for the compliance officer to be determined next year. But the line item is there.
Okay.
But it's 50,000 on the IDA,
And then-
how much is it in the LDC?
So I don't know if you talk about here, but on the LDC side, it's also, so I was estimating a salary of 55, a base salary of
You just
50,000.
did the math before, about
Yeah.
80,000.
80,000.
Right, but
So
to break
why
it
is
between
in-
the two.
Why is it, so is
Only
it 50
50
here and 30 on the
Yes,
other end?
because the LDC doesn't have as many projects.
Okay.
So we
on
would
that
see the
side.
balance of that in the LDC.
30,000 in the LDC.
Okay.
Would the job description be broad enough to have the person help you in other ways?
If
It-
required.
Yeah, if it's required. I mean, again,
like it, yeah.
Jane and I have, these are, we're asking the board to put placeholders.
Yeah, no.
Jane and I are gonna, formalize the job
Okay.
description and present that to the board. But-
That's, okay, so the
but
expectation.
But the expectation, yeah, so that's the expectation. But again, the reason why we're putting the cost a little bit more on the IDA side is the IDA has more projects to monitor and review than the LDC
Okay,
does.
so the process of, we've discussed it now, the process of approving it is what would your anticipation be at the timing of that, getting us more information and approval? When?
Probably, last Jane and I talked about, because we're entering the peak compliance, we probably don't have time to hire that person. So we're thinking that this person, we would start posting the job description possibly in March of next year. So.
Okay,
You know.
and the actual formal budget will be approved
Yes.
in,
Well, so I'm asking for approval for the board for the 2024 budget. But as the year goes on for 2024, we'll know what the true cost
Okay.
of that will be.
all right,
And
so
to
you
have
are
a budget.
asking us to approve the placeholder.
Correct.
Right.
So we would be approving the future spending of that money.
Correct.
Okay,
So you're gonna post a job in March, right?
Yes.
So then for 2024, it's not a full year of estimated $80,000. It's more like a prorated, if you're posting an art, so 2/3 of that is probably gonna be closer to 50.
Yeah. So again, we try to be conservative, so,
Well, I'd like to
overestimating
take
the
any of those
expenses.
excess funds and allocate them to the downstream service entities that spur additional economic development, agribusiness, the film, arts.
Yep.
I just have a question about
Yes.
detail. So in your expenditures thing, write-up, you have, as a result, we're proposing an increase in the contract fee by 50,000 for a total of 200,000 for the increased compliance and administrative services. So, I'm sorry, I'm maybe being,
Yes. The other 150, if you're saying.
yeah, exactly. Where's the 150 that I'm not picking up?
So 150?
But
That's the.
for an but it says
Current LDC.
an increase, no, I'm
An
just going
increase
by.
of 50,000.
It's going from 150 to 2.
Yeah, okay,
total.
for a total, so it's not an increase, yeah, I just want to make
No,
sure
that's,
that
that's a good question. I
that-
understand what you're saying.
mixing the language.
I'm sorry, maybe I wasn't
Yeah.
clear in my language.
Yeah, well, I don't think so, I think it's me.
Okay, anything else? Okay, so to be clear, we had a discussion about some LDC items which will be voted on there, but since they're pertinent to money flowing between the two organizations, I felt it was important that it be talked about here, especially since the majority of the expense really will be IDA expenses.
I'm just, so the IDA rents a storage unit,
Yes.
Yes,
for what purpose?
Records.
records.
And how many years, what's the, do you have a record retention?
So, yes, so there are certain records of the IDA that we are required to keep forever, for perpetually. And then also project records
Okay.
and then also past projects that we've closed on, we're required to keep.
So we went from a dangerous closet to a more roomy
Yes,
spatial where we can access the records that was
And-
discussed at our meeting.
The
yeah.
cost of scanning them and all that is,
Well, so some of them we're not allowed to scan. We have to have actual hard paper copy.
all right. Okay, so Jamie, we sort of like jumped in and out. Is there a conclusion that you would like to make of your
Yeah,
presentation?
the conclusion is we'd like to have the board adopt this budget for 2024.
Okay, based on the discussion so far, well, actually, did we have a motion in the second, or is that an old topic?
Don, you made a motion, didn't you?
I think, I didn't make a motion.
No, I don't think
No, that was on the other,
motion.
we
Yeah.
had a motion second, but so, would somebody be willing to make a motion?
I'd make a motion, but can we add to it some of the detail about, is it just this needs to be a straight motion for accepting or should we add the
I think it
detail?
should be a
I think
straight
this
motion at
straight
this
motion at
point,
this point,
Yeah.
and then I can bring up the,
the items we discussed.
like amended budget
Right.
with the
Yeah.
items that we discussed, once we know the real numbers
All right.
of.
And we have conservatively budgeted this expenditure for compliance, at a worst case, which seems to be reasonable
The
to.
biggest problem is with this budget is due to New York, right?
Yeah.
By the end of the month.
So just-
That's so, it's early on, but yes, we can make our budget amendments later on.
Yeah. So Mark, are you comfortable with that?
Very.
Making a motion as presented by the Finance and Audit Committee? Okay. Second by anybody?
I'll second.
Thank you, Amy. Okay, Jasmine, will you please take a vote?
Don Sagliano,
In favor.
Jamie Pacone,
Approved.
Amy Bondieri,
Approved.
Mark Doyle,
Approved.
Jim Dean.
Approved. Thank you, Jamie. Is there any unfinished business?
No.
Okay, so I would like to adjourn.
Oh,
the
we
meet-
have one
I'm
new
sorry.
business
Oh, I'm sorry, new business.
So, the Business Excellence Awards, our annual Business Excellence Awards is coming up on November 2nd, Thursday, November 2nd at the Culinary from 5:30 to 8:30. Typically, the IDA board buys tickets to the event for board members and staff. So I'd like to know if the board would still like to buy it's 8 tickets.
You're saying within the budget, that it's not the individual members that contribute to the.
Yeah, within the budget. So I take it out of the IDA budget and
Yes.
we give it to the
Yeah.
LDC as for tickets.
And that is in our budget?
That is in our budget and we do account for that, so yes.
So do we need to vote on that?
So yes,
Okay, the motion would be for the IDA to purchase 8 tickets, a
Correct.
table.
A table.
At a cost of,
$1,500.
for the Business Excellence Awards. Can I get a motion to approve? that?
Motion.
Second.
Second.
Thank you, Amy. Jasmine, would you
Mark
please?
Doyle,
Approved.
Amy Bondieri,
Approved.
Jim Pacone,
Approved.
Don Sagliano,
Approved.
Jim Dean.
Approve. Okay, any other new business?
That's it.
Okay, I would like to adjourn the Dutchess County IDA meeting.